It's Tuesday, the 3rd of August 2021. Welcome to Fear and Greed, the business podcast that sets you up for a successful day. I'm Sean Aylmer. US payment systems group Square set to buy Afterpay for $39 billion in the biggest ever deal on the ASX. That's our main story. Also coming up in today's podcast, Santos and Oil Search to merge, creating a new giant of the oil and gas sector. New South Wales and Queensland remain in the grip of the COVID crisis, and house prices jumped 16% in just 12 months, the most in 17 years. Then, stay listening for my chat to the boss of WPay about the payment system in Australia. But first, here's a brief look at markets. Wall Street was mixed after figures showed a weaker than expected manufacturing sector last month. The S&P 500 and Dow Jones Industrial Average in late afternoon trading are both flat, while the Nasdaq was up 0.4%. European markets were stronger, with London's FTSE up 0.7% and the Stoxx Europe 600 0.6% higher. The S&P ASX 200 surged 1.3% yesterday to close at 7,491 points, a new record, following the two mega deals I mentioned in the introduction. The corporate news well and truly captured the market, with the technology sub-index jumping 6.5%. But it was broad-based. Indices representing financials, healthcare stocks, consumer staples and energy companies were all up more than 1.5%. The banks did particularly well yesterday. National Australia Bank was up 2.4%, while Commonwealth Bank and Westpac were both more than 2% higher. CSL was up 1.9%, while the retailers, Coles, Woolworths and Wesfarmers, all rose. Nothing like a bit of corporate activity to get people excited. A notable exception was Telstra, which fell 0.3%. Boral was another underperformer, down 4.2% to $6.88 a share, 7% below the level that Seven Group paid to pick up 70% of the stock in recent weeks. Oil prices fell back overnight, with Brent down more than 3%, lower on the back of concerns over China's economic recovery. China is the world's second largest consumer of oil. Gold prices were flat. The Aussie dollar is trading at 73.6 US cents, and iron ore prices have tumbled over the past couple of days after having an extraordinary run and are now at a 2.5-month low. A tonne of ore is now worth around $180 US, which is still about 3 times the levels forecast in the Federal Treasury's budget papers. The reason, according to analysts, is that as economies reopen, service sectors expand and manufacturers slow. It triggered an underperformance of the big miners yesterday. BHP's share price rose slightly, but Rio and Fortescue both lost ground. US payments giant Square has made a $39 billion bid for buy now, pay later group Afterpay in the biggest deal ever on the local ASX. Square said it was attracted to Afterpay's first mover advantage in the buy now, pay later space, and was prepared to pay a 30% premium to the group's closing share price last Friday. Square, run by Twitter founder Jack Dorsey, last night said buying Afterpay would drive more commercial activity across both groups and better connect retailers with young shoppers. Afterpay's two founders, Anthony Eisen and Nick Molnar, will each receive $2.7 billion in Square stock as part of the deal. The deal is massive and still has regulatory and shareholder hurdles to overcome. Afterpay shareholders will receive Square stock, and some local investors may not want to hold shares in the US company. Square indicated it would set up a secondary listing on the ASX to help facilitate the purchase. The announcement triggered a 19% jump in the Afterpay share price, as well as increases in other buy now, pay later groups, including number 2 local player Zipco. Its share price jumped 9%. Split was up 8.7%, and OpenPay and Sezzle's share prices increased 4%. Afterpay's board has approved the deal, and it comes just 5 years after the group listed on the ASX. Its rise has been quite amazing to watch. Its current share price is 3 times its level pre-pandemic, though the offer of around $126 a share is still below its peak of nearly $160 a share back in early February. The board, given that it's happy to accept the $126 a share offer, must have suspected it was overpriced back then. The majority of Afterpay's sales are now in the United States, where it competes with PayPal and Apple. Yesterday, it reported strong growth across its business, with underlying sales up 100% in the past 12 months. Having the backing of Square, a $150 billion behemoth, will better allow it to sign up merchants and customers in the world's largest economy. Afterpay is set for the world stage. In a moment, the rest of the news you need to know this morning. In overseas news, house prices are booming around the world, with 37 of 40 OECD countries recording increases over the past year, the most in at least 2 decades. The figures, compiled by the Financial Times, reflect low interest rates around the world, the desire to work from home, and savings accumulated during lockdowns helping people build up deposits. More than 70% of Americans have now had at least one COVID jab, the target set by President Joe Biden. But the Delta-fueled resurgence in the country is triggering around 72,000 new infections each day. In Europe, the total number of recorded infections since the beginning of the pandemic passed 60 million yesterday. Again, the Delta variant is lifting cases in several countries, including Italy and France. And commodity prices had a strong July, with a boom continuing among major products. Copper is considered an economic barometer, and it was up more than 4% during the month and is close to a record high. Nickel was up 7% and is trading around its highest level in 7 years. Aluminium is at a decade peak, while gold was up 2.5% for the month, having fallen 7% in June. Oil prices were more than 1% higher, the fourth month of gains, while natural gas is at its best since December 2018. Locally, the Army was deployed in New South Wales yesterday to help enforce lockdown restrictions. About 300 members of the Defence Force will work under the direction of the New South Wales Police. It came as the state reported 207 new locally acquired coronavirus cases, many of whom were in the community while infectious. A man in his 90s died, taking the number of fatalities during the current wave to 15. Victoria tightened its border with New South Wales yesterday, but loosened some restrictions for its residents, particularly those using gyms and hospitality venues. The state recorded 2 new cases yesterday, both of whom were in isolation. Southeast Queensland extended its lockdown until Sunday after another 13 local cases of COVID-19 were reported, all linked to the Indooroopilly cluster. And Shane Warne, Australia's greatest ever cricket bowler, has tested positive to COVID. In other coronavirus news, the latest vaccination numbers show that 41% of the population have had their first jab, and almost 4 million people are fully vaccinated. Meanwhile, New South Wales health authorities asked the federal government for an additional 30,000 doses of AstraZeneca vaccine as younger people opt to receive the jab. Airlines will continue to receive federal government assistance until the end of the year so they can continue to service the major capital city routes. Half-price flights will be retained until November 30 to encourage travel. Airlines will also become eligible for a staff retention scheme. And Defence Minister Peter Dutton won't be in federal parliament today when it resumes because one of his sons attends a school linked to Queensland's COVID-19 outbreak. Mr Dutton and his family will have to quarantine at home for 14 days. Christian Porter, the former Attorney General, will take on Mr Dutton's job as Leader of the House while he's away. The Board of Oil Search said it would recommend a merger with Santos to create a $23 billion oil and gas major, after the latter upped its bid first made 3 weeks ago. Back then, Oil Search's CEO had stepped down and its chair said no takeover bid had been made, only for Santos's chair to come out 24 hours later and say it had put forward a merger proposal. The upshot of it all is that Oil Search shareholders will now own 38.5% of the combined group, up from the original proposal of 36.9%. The combined business will be a top 20 ranked company on the ASX, bigger than Woodside Petroleum, and will have operations in Australia, Papua New Guinea, Timor-Leste and North America. Property prices in Australia have grown for 10 months in a row, after increasing 1.6% during July. Across the country, prices are up 16% on a year ago, and that's the fastest increase in 17 years, according to CoreLogic. Overall, the pace of increase in prices has come off the boil, though Sydney remains strong. Canberra was the best performing capital city last month, up 2.6%. But most of the increases are coming in houses, not apartments. Unit prices are 7.3% higher than a year ago. Will it continue? Probably not, with most analysts tipping price rises next year closer to 5%. Affordability is starting to constrain buyers and interest rates won't get any lower. It's also possible that regulators could step in to take some of the heat out of the market. Qantas is holding a frequent flyer points auction this week, trying to help travellers offload some of those pesky points that they can't use. A Boeing 787 simulator experience with a Qantas captain attracted more than 50 bids yesterday, with a going price of 1.2 million points, according to a report in the Australian newspaper. Up today is a Queenstown premium holiday for 4 people, and then tomorrow, a soccer coaching session with Australian manager Graham Arnold. A parliamentary inquiry will look into the increasing level of ownership of ASX-listed companies by large superannuation funds and private equity groups. It will consider all big investors into companies listed on the ASX, with the aim of ensuring current legislation is in line with what's happening in the market. In recent years, big super funds with a legislated flow of funds from Australians have built up huge holdings of local companies, and the concern is that some have too much power. A2B is the company that runs the largest taxi networks in Melbourne and Sydney, 13 cabs. The chief executive of the group, Andrew Skelton, said that drivers in his 7,000-strong network were feeling the pinch, and about one-third were off the road. But thousands had become delivery drivers for online purchases and were working with Woolworths to provide grocery deliveries. And Olympians are arriving back home in Australia. Unfortunately, the women's hockey team will be joining them shortly after a disappointing quarter-final loss to India. So too the Matildas last night. I don't want to be critical, but the hockey team is such a good group of players. I was hoping they'd go all the way. Of course, anyone that comes through the terminal goes straight into quarantine. Tough. A quick shout out to the Indonesian women's doubles badminton team, which yesterday won gold, beating hot favourites China. The Indonesians were unseeded and won their country's first gold medal. Up next is our daily interview, and my guest today is Paul Monington, the Managing Director of WPay. WPay is Woolworths' payments division, and considering Woolies is the 5th largest processor of payments behind the big 4 banks, Paul has a pretty big job to do. The company has turned the payments business into a standalone venture, and my conversation with Paul is a fascinating insight into how it all works. That's up next in the Fear and Greed playlist on your podcast platform or at fearandgreed.com.au. It's Tuesday, the 3rd of August 2021. I'm Sean Aylmer, and that was Fear and Greed. Enjoy your day.